If you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it because what would I do with it?
Warren Buffett has never liked Bitcoin. He's even called it rat poison and warned investors to stay away from it. Despite his public criticism, Buffett's $760 million crypto investment actually tells a very different story. In this video, we'll show you how even after dismissing Bitcoin, Buffett has quietly positioned Berkshire Hathaway, his investment company, to benefit from the digital asset boom. But in order to understand exactly how he's doing this, we need to know why Buffett is so opposed to Bitcoin in the first place. It all comes down to one core belief. Bitcoin does not produce a return on investment. Unlike housing or a business, Bitcoin does not generate income. It does not pay dividends or produce anything tangible. So in Buffett's eyes, Bitcoin is not an investment. It's pure speculation, or as he likes to put, it's a bet that someone else will pay more than you did down the road. And that kind of speculation often comes with serious volatility. Take this 87% rally between January and March 2024, for example, or this 60% crash between April and June 2022. Such volatile price action has pushed major players and even central banks, like the European Central Bank and the Reserve Bank of India, to publicly warn against Bitcoin's reliability as a long-term asset. And that kind of unpredictability is exactly why Buffett has stayed far away from Bitcoin. That is until now. By the way, we are doing a 30% discount on our crypto trading membership. Our goal is to provide profitable trade ideas to as many people as possible. So we're doing this discount to help you lock in our service at a ridiculously cheap price. Our trade ideas have allowed our members to make some incredible profits last month, with our top trader making a 351% profit with a 92% win rate. We rarely do discounts like this on our service, so make sure you don't miss out. In June 2021, Buffett's Berkshire Hathaway invested $500 million in a pre-IPO round for a company called New Holdings. Then later in December 2021, he doubled down on that bet with a $260 million investment during the IPO. So that's a total $760 million bet on the future of Bitcoin through New Holdings. You might be wondering, what does New Holdings have to do with Bitcoin? Well, it's the parent company of Brazil's largest digital bank, Nubank. It's a Bitcoin-friendly banking platform in Brazil and some other emerging markets, where traditional banking is still catching up. And here's what gives Nubank a big advantage. It hasn't been just offering basic banking services like checking and savings accounts, credit, payments, investing, and insurance. But it has also been providing Bitcoin and Ethereum trading and transfers in its app back in 2022 itself, when a lot of banks either ignored or restricted crypto access. So it's a complete financial stack that has blended traditional banking with digital assets. This makes NU Holdings heavily influenced by the performance of Bitcoin. We can see that by looking at this chart showing the price of New Holdings and Bitcoin. The two assets indeed move quite closely together. When Bitcoin rises, New Holdings moves up. And when Bitcoin falls, New Holdings also declines. So, by investing in New Holdings, Buffett has also been able to get indirect exposure to the growth in the crypto market. Since the NU app went live in 2014, the company has experienced explosive growth. Part of this can be traced to the rising interest in crypto in Brazil. As a lot of people looked for exposure to digital assets, Nubank positioned itself as a safe, simple, and regulated gateway. This move captured a massive wave of users, as we can see through the growth that Nubank has experienced in the past few years. Just 3 years after the launch of the app, the company already had 2 million customers. That number jumped to 42 million by 2021, 65 million by 2022, 84 million by 2023, and by the end of 2024, Nubank had surpassed a staggering 110 million users. That's nearly a 300% growth in just 4 years, making it the third largest financial institution in Brazil by customer count. So unlike traditional banks, Nubank got a first-mover advantage in providing Bitcoin access by blending digital banking with digital assets. And that alignment with Bitcoin may have fueled a significant portion of the price momentum for New Holdings. The big question now is if New Holdings is still a good investment. After all, Buffett's track record would suggest that it's not a bad idea to follow his lead. Since the 2009 post-financial crisis market bottom, the S&P 500 has returned roughly 600%. Berkshire Hathaway, on the other hand, has returned nearly 900%, and over the long term, this outperformance gap is even wider. Since 1979, When Berkshire was listed on the stock market, the S&P 500 has delivered around a 5,000% return, while Berkshire has seen over a 325,000% return. That's a 65x outperformance against the benchmark US stock market index. Buffett has achieved this by investing in businesses with consistent cash flow, strong fundamentals, and long-term scalability. New Holdings appears to fit that framework. As we highlighted earlier in this video, the customer growth for New Holdings has been quite rapid, but what matters more is how that growth translates into profit. In Nubank's case, the economics are quite attractive. Currently, it costs the company $6.5 per month to acquire a new customer, and less than $1 per month to serve that new customer. Now, the average monthly revenue from this new user is $6.82. That means Nubank becomes profitable on a new customer in less than 2 months. This operational efficiency is directly reflected in the profit margins of New Holdings, which shows the percentage of revenue a company keeps as profit after all expenses. New Holdings currently has a profit margin of 35.77%. That means for every $100 in revenue, nearly $36 is profit. For reference, Banco do Brasil, one of the major banks in Brazil, has a profit margin of 10.23%. That makes New Holdings more than 3 times as profitable. It is incredibly profitable even when compared to some major US institutions, like Wells Fargo at 24.8% and Bank of America at 27%. New Holdings still has a higher profit margin, and that outperformance isn't limited to only profitability. New Holdings also has an attractive balance sheet, which is a key criterion for Buffett. The company currently has $2.071 billion in debt and $7.65 billion in equity, resulting in a debt-to-equity ratio of just 0.27. In simple terms, the debt-to-equity ratio compares how much a company owes versus what it owns. Think of someone with a $100,000 home and only $27,000 in debt, indicating low leverage and good financial strength. Now contrast that with Banco do Brasil's debt-to-equity ratio of 4.18. And we can see that it is a much more debt-heavy structure that comes with higher financial risks, especially in uncertain environments. So not only is New Holdings growing quickly and profitably, it's doing so with very little reliance on debt. Of course, the high profitability, strong growth, and strong balance sheet of the company does make the stock quite expensive today. And we can see that through something called the PE ratio, which measures how much investors are paying for each dollar of company earnings. A higher PE ratio typically means higher growth expectations. Currently, Anu trades at a PE ratio of 25.8. This is quite expensive when compared to some of its competitors. PNC Financial Services trades at 10.9, US Bancorp at 10, and Banco do Brasil at 6. But price alone doesn't tell the full story. We need to also account for how fast the company is growing. That's where the PEG ratio comes in. The PEG ratio divides the PE ratio by the earnings growth of the company, thus giving a more complete view of the stock valuation. A PEG ratio below 1 indicates potential undervaluation. Around 1 suggests fair value. Above 1 implies a premium for expected growth. New Holdings currently has a PG ratio of 1.1, so right around fair value for a high-growth company. So New Holdings is growing rapidly, increasing profitability through its attractive economics and delivering stronger margins than even many legacy banks, all while maintaining capital efficiency. Buffett didn't make a bet on the price of Bitcoin itself. Instead, he invested in a business positioned to benefit from Bitcoin's adoption without depending on its price. That's not a contradiction to his philosophy. In fact, it's actually a continuation of it.